Investors are facing lower growth and lower investment returns. To help us identify the megatrends in the market and how to adapt to this new world of investing is Larry Fink, Chairman and Chief Executive Officer of BlackRock, the world's largest money manager. Mr. Fink, what are the emerging trends that you see as crucial for investors to be aware of?
The trend of aging and longevity. We have two macro trends going on: that we have an aging population in the West, but importantly, that aging population is going to be around longer and longer and longer, and we underappreciate what that means for investing. We have such preoccupation on the events of the moment, the largest headline of the day, and those preoccupations are not appropriate if you're focusing on the needs of retirement that may occur in 30 or 40 years. And if you then add longevity, that you may live to 90, that need becomes greater and greater. So to me, that is the biggest macro trend of the day. It's a little harder to understand, though, because it's not a problem today. It becomes a greater problem every year if you don't focus on it. And also, this is a big problem related to our governments. In the United States, we're focusing on what should we do with our deficits. Same thing with Japan. These deficits are from a lot of governmental spending. In the United States, it's from governmental spending towards helping people during their retirement ages. And we are all living longer, so that's why another reason why our deficits are growing so large. So this is a big issue that we have to become more aware of, and we're going to have to really start addressing this now, or the problem only gets more severe.
Which markets do you see the best opportunities in, and why?
Well, not because I'm a U.S. citizen, but I do believe for the next 3 to 4 years, the U.S. is probably, on a risk-adjusted basis, the best market in the world. We have 4 megatrends that are very important for a positive outcome in the United States. We have a very strong banking system. We also have a banking system that is in need of new assets. We've had 4 years of low interest rates, and the low interest rates is now harming the banks because their assets are maturing very rapidly. People are refinancing their mortgages. People are paying down their mortgages, paying down their loans. So the banks are losing their high earning assets. And so now the banks have to be a lot more aggressive in terms of re-lending their money. And this is what I think will be a very positive outcome in the United States, because the banks are going to become much more aggressive in lending. They're going to start lending to small and medium businesses. And in turn, these small and medium businesses, once they get more capital from the banks, they're going to start hiring. And so I think that, you know, the strength of the capital of the banks and their need to start lending is going to be a very powerful trend in the next few years. The third area is, in the last 5 years, we've struggled with a very severe excess housing inventory. Housing prices collapsed in the United States. We are now in the 7th year, and now housing is beginning to stabilize. In fact, prices are going up. So importantly, what we saw as a very large headwind in the United States is now becoming a very good tailwind. And so that's going to transform the economy too. It's going to add at least 1% of GDP to the economy, where we went from headwinds to tailwinds. And the fourth mega trend is the whole situation on energy. We spend so much time talking about technology, and technology changes, but we don't understand how technology changes in the manufacturing process. And nowhere more in the world than the United States energy sector have you seen how technology has transformed a country in which 4.5 years ago we were focusing on the fear of being so reliant on importation of foreign oil. And we were talking about all these alternative energy sources that we need to do. And now, through these new technologies, we found natural gas and oil, whereby today we are now projecting out 4 and 5 years, the U.S. will be North American energy independent. So a substantial change from what we just thought just 4 years ago. But more importantly, having this proliferation of excess energy, we have the lowest prices of natural gas in the world. Natural gas is $3.50 in the United States, versus in Zurich it's $11, and in Japan and China it's $18. We have a huge advantage, and that advantage is going to allow U.S. become much more prevalent in the manufacturing, because our natural gas is so cheap. Manufacturers are now moving factories to the United States. So the combination of these four megatrends is giving the United States a very unique advantage, and I think that advantage will be with us for some time.
So for some final remarks then, what's your advice to investors on how to position themselves now?
Well, I believe most investors have too large of a gap between what their needs are during retirement, or what their needs are, and versus what their savings. Because interest rates are so low now, it's very hard to accumulate your savings to get to that end result need. So it is my view that you're going to have to take on more investment in the form of equities. Some people will call that more risk, and I was hesitant to say risk because I think there's greater risk by not doing that, because you're going to have such a small outcome pool of money for retirement. And this is why we have to start focusing on objective-based investing. We are too preoccupied on the noise of the day, and I can't underscore enough that we have to get people to start focusing on what is their objective. What do they need to have a retirement with dignity? I'm frightened that we're going to have inadequacy of what our pool of monies will be for retirement, and we're going to have many families who are going to have an inadequate pool of money, and they're going to have lifestyles far less than what they wanted. And that's going to be a big crisis. That's going to be not just in the United States, in Europe, in parts of Asia. It's going to be a global crisis if we don't address it now.
Thank you very much, Mr. Fink. For more insights from thought leaders, check out the Asian Investment Conference website.